That reminds me that in less than a month, tax day is coming, that dreaded day that we all as business owners dread. And I wanted to talk today about the importance of financial statements. Hey, business owners. It's St. Patrick's Day today, so you can see I'm wearing green. And that reminds me that in less than a month, tax day is coming. And I wanted to talk today about the importance of financial statements and even using tax returns as a way to improve your business. A lot of us business owners, since we don't like April 15th, we don't like looking at our tax returns. However, they can help us to improve our business. One of the first basics in anything that has to do with business is knowing where you are, and that way you can map out where you want to go. But if you don't know where you are, there's no way to map out the best route to your destination. So I really want to focus in on the basics related to financial statements, tax returns, all those things that can help us know the score, know where we are, so that we can get to where we want to go in life and in our business. The first thing I'd like to mention is the principle of keeping your business financial information separate from your personal. And so if you're a new business owner, or maybe you've been in business for a long time and you have everything commingled, can really get you to a point where you really don't have clarity in terms of where your business is. So what I want to encourage you to do is, if you've not opened a business bank account, go ahead and do that. Keep your finances separate. The second thing I'd like to talk about is how can you track those things. If you have a checking account, you can write a check, but you likely also have a debit card, and you will have a debit card for your business account as well. If you have those, then you can use those to make all of your expenses, both personally and through your business. That way you can know exactly at the end of the month how much you've spent through your business and how much you have spent personally. And as far as income goes, from a business standpoint, you want to deposit all of your business income in your business account. And then so maybe your question is, how do you get the money from your business account to personal? You simply write a paycheck. It could be a draw or a paycheck where you withdraw taxes, but you want to write a check from your business account to your personal account. If you do that, then you will be able to keep everything separate. Your tax returns will be easier to do, and you'll be able to understand how much you're spending personally as well. Again, I can't overstress the importance of keeping those separate and having clarity, because all organizations, sports organizations, public organizations, all businesses, if you want to grow big, you want to track those, because every significant growing business does that. Step number 3 is, it's possible good at managing your money. You can also have a credit card, a business credit card, and a personal credit card as well. And this is the way that I handle all of my expenses. Everything that is personal, I use my personal card, my business card, and that way I can pay off that entire balance every month. And then now I've got a completely separate way of tracking my business and personal expenses. The next thing I'll talk about is having a bookkeeper at minimum, and eventually a CPA as you grow. I'd like to encourage you to get a bookkeeper, and that way you can take all of your business income and all of your business expenses. Now that you've got it all on one debit card or credit card, you can take that information along with your bank statement and give that to your bookkeeper. And bookkeepers are relatively inexpensive, and they will provide to you a financial statement. Now, the next question you may ask is, how often do I do that? With tax returns, you only get once a year. The fact is that it's good to know where you are annually. And by the way, you can use last year's tax returns and compare them with this year's tax returns. And that's going to get you a step ahead of just not having any clarity at all. You can see if your business is growing or if it's declining, and the expenses that you have, if you put them side by side, that can help you to make good decisions and to know how your business is performing. Now, back to the bookkeeper. If you are using a bookkeeper, they will provide to you a profit and loss statement for your business and a balance sheet. And the profit and loss statement is simply a statement of all the income that comes in your business, all the expenses that are paid out through your business, and then how much profit that you made at the end of the day. And then a balance sheet takes a snapshot of, you might call it the net worth of your business, so to speak, on the books. That is, it looks at your assets, that is everything that you own, equipment, money in the bank, accounts receivable, things that you have generated, that you've earned. It also looks at your liabilities, things like loans that you've taken out, or any other debt that you have, and accounts payable. And so what you want to do, look at those on a regular basis. And the best way to do it is to look at those monthly. If you don't want to do monthly, quarterly at the very minimum, you want to be able to compare this year's finances, say the first quarter, January, February, March. That'll give you a 3-month total where you're comparing this year versus the same period last year. And that way you can look at, it's going to tell you a bit of a story. It's going to tell you how well you're managing your expenses. It's going to tell you if you're growing your top line, that is your income. And that will help you get clarity in terms of where your business is going. You always want to have a comparison. If you don't do the comparison, you really don't know how you're performing. You don't know if you're saving certain costs, or you don't know if you're growing your sales. And so having that comparison can be very helpful. So that's really the basics that I would talk about related to financial improvement. That's the first step toward improving your business, improving your growth, improving every aspect of your business. That allows you to hire employees, that allows you to delegate, and to become eventually a business owner instead of just being self-employed. So there you have it. There's a few tips related to financial improvement. Hope you have a great day.